Hello. Good evening. Thank you all for coming here on this busy Wednesday evening. A really pertinent conversation to be had on AML, KYC, and I hope we don't hear the O word or the M word of this Medibank or any of those other issues, but definitely an important conversation to be had. And FinTech Australia also has some important information to share with the rest of our audience, including the ones online. So yeah, to kick this off, firstly, I'd like to acknowledge the Gadigal people of the Eora Nation as the traditional owners of the land on which we meet today and pay our respects to the elders past, present, and emerging. Welcome again, everyone. And to kick this off, we have 3 sessions, the 2 panel sessions and 1 quick introduction about the subcommittee that we're building out on cybersecurity. So to start things off, I'd like to introduce Zach Bennett, AML Technology Consultant from Comply Advantage, and the panelists who will be discussing AML business practices for high growth fintechs. Zach.
Great. Yeah, we're all blinded slightly here. Thanks for joining us, everyone. Great to be here, and thanks to FinTech Australia for hosting us. Delighted to sit here with Stu Hallows from Patron and Ian Ratty from Shape. We're hopefully going to have a discussion today about how you build out successful AML programs for high growth and ambitious fintechs. So we'll go through a little bit about how the challenges that you face, how you overcome them, and touch on some of their experiences. So hopefully some people can learn and see how that goes. So Stu, would you like to introduce yourself, and we can take it from there?
You hear me? Yep. Hi guys, thanks Zach, good evening everybody. So I'm Stu Hallows, I'm the Chief Risk Officer at Patron. Patron is a early stage, albeit high growth stage at the moment, fintech, providing a platform particularly for accounting firms that actually bring a one-stop shop in terms of invoicing, payments, reconciliation, and everything that maybe an SME or a small corporate wants to have upload into Xero for their accountants to manage in a very efficient way. We sell financial products, so essentially we are a licensed business, regulated business, and therefore we have a lot of compliance obligations, and we use Comply Advantage for one of those.
Hello. Hi everyone, my name's Ian Ratty. I'm currently employed by Shape, and I've been with Shape for 3 years. In case you don't know what Shape is, we launched a retail product called Hey, and that was launched 3 years ago, and then we moved into the business-to-business proposition as well, which is we help small fintechs to tier 1 banks use our platform to facilitate payments, cards, Apple Pay, Google Pay, a whole suite of different payments. Again, we use Comply Advantage as part of our KYC for our retail product, but also for our clients also.
Thanks for the plug, guys. Much appreciated. So in terms of kicking us off from a conversation perspective, both of you have vast experience in working in corporates and in the scale-up space, and in the last few years have been focused on the scale-ups and high growth. So I think a good place for us to start really is just to understand, for anybody here who's in that process, what do you see as being the top priorities when creating an AML program for a high-scaling business?
Yes, so we're probably a little bit further behind than Shape. Got a bit of a head start on us, but essentially Patron, yeah, we've been around for just over a year as a licensed business. we're moving very fast. We've got all the foundations in place. The guys are doing a fantastic job of marketing the business and getting new products, new customers, new initiatives, and everything else out there. And from a compliance perspective, sometimes it's like trying to lasso a racehorse at full gallop, because the thing moves so fast, it's very difficult to catch up sometimes, particularly with limited resources. So going forward at the moment, we're also moving into other countries. So we've got to a point whereby we feel it's right to expand into 2 other jurisdictions. One of those will be coming next year. We're still working on it, but it'll be the UK. There's another one due to come soon, but I won't sort of steal the founder's thunder on that one. Priorities are very much trying to keep the compliance environment aligned. Obviously, everywhere we go is going to have nuances, going to have change of regulatory considerations that we need to make. And we need to make sure we're up to date with all of those, and that we extend ourselves out to the regulatory environment in a way that's collaborative for those regulators. So working through all of those things, we've got to make sure that we're fully aligned. To do that, though, we've got to make sure we keep consistent with what we have in terms of tools, infrastructure, whether that's people or technology. We don't want to be going out there and creating a whole raft of different infrastructures and end up with diverging and legacy in the future, legacy infrastructures that are going to cause us more problems and cost us more money as we go forward. So really working with consistent tools, making sure that we actually build out enterprise models where we can, particularly around programs and the likes where we have the ability to do so. We keep those human resource pressures at a very manageable level, and we can keep the governance and the oversight also at a very manageable level. So yeah, again, we're small. We don't have a lot of resources out there, but we do feel that it is right for us to move out into different jurisdictions. We need to be able to manage that process in alignment with the business and maintain the compliance environment for all of those countries. I guess that's the baseline for us.
Anything for you to expand on there?
So actually, I'll talk from a retail perspective and a client perspective. So when we launched initially, like a lot of fintechs, very focused on growth, getting customers on board as quickly as possible, while also ensuring that you're compliant and you're meeting all the obligations that you need to meet. So for me, picking good vendors was very important as well, because you want to make sure that you're bringing on really, or working with good vendors that are going to give you quality results. Like, for instance, Jumio, we used for our document capture, our liveness checks, our selfies, and then also, we again Comply Advantage for the PEPs and sanctions, but then ensuring that you're not getting too many escalations to you where you have to manually review, start taking all that, doing all those reviews. But then from a client perspective, taking that and being able to use that, what you've built on the retail side, and actually being able to present out to clients as well and show them, this is what we have, this is what we're able to use, and we can also allow you to use this as well. So offering a back-end solution to clients also.
Great, thank you both. It's interesting you both talked about growth there and choosing the right solutions, and Stu, you touched upon legacy issues of should you not do that, and the kind of size that you're at. So that's something we come across quite a lot, right? And there's often a debate internally with high growth fintechs of where you spend the budget, how you spend it, and when. And often there's a difficulty in bringing together the compliance spend as opposed to the spend on marketing, commercial, those things that are often alluded to growing revenue. So I know you both probably experienced this before, but how internally do you tackle that challenge of the perception that compliance doesn't create revenue and doesn't create that growth that obviously everybody's looking for.
Yeah, I have to be careful because our head of marketing is sitting over there making notes. Look, I mean, does compliance generate revenue? No, it doesn't. But that's a very narrow-minded sort of view of the whole thing. It's actually a bigger piece, really. I think, you know, it's a cost of doing business. If you're going to sell financial products, regulated financial products, you're going to need to meet the obligations of your regulators. You have to. If you don't want to spend the money, don't get in the game at the end of the day. So you know, you have to be sort of prudent in terms of your approach to getting into this business in the first place and understand that there is a budgetary impact to it. That said, there is a lot out there now with the right people, and there's some great people in Australia, great people worldwide who have a very balanced commercial hat on at the same time as wearing a very knowledgeable regulatory hat and understanding where the two things need to sit in balance, particularly in clearly the FinTech startup world. I think if you can get the commercial and the regulatory balance right in your organisation, you're in a good position to actually maximise the opportunity of compliance becoming an enabler for customers. Because salespeople, you know, they're going to sell. They want to get the revenue in. But if you can actually help the process of KYC, onboarding the customer, providing a level of understanding for the customer to give you credibility as an organisation, particularly, I won't mention the O word or the M word or the star word or the crown word or all of the other things that are out there at the moment that actually people are worried about. So I think there's a real good position for compliance to be the credible sort of old uncle sitting there, look at my hair, but you know, sitting there giving the customers the benefit of an understanding that protection is definitely at the forefront of our value prop. And I think that, you know, that provides a real enabler for maximising the revenue opportunity. Finally on that piece though, you've also got to give the customer a KYC and an onboarding process that they like. So the user experience is a real enabler. It can be a real inhibitor and a real choke point if you do it wrong. And again, there's a lot of technology out there, there's a lot of good people, a lot of good processes that can allow you to give the customer a great experience by using the right tools. And I don't think there's any excuse for any fintech, any startup, any mature organisation to really turn around and say compliance, them and us, it doesn't help the business. So I think that's a terribly narrow view. Sorry.
I think if anybody tells me that they've not got the budget they like us, I just need to bring Stu with me along, and he'll definitely get across that point. Can I steal that one off you, Stu?
You can. I'm doing it for Sarah's sake actually in marketing. But.
And Ian, your thoughts?
Yeah, definitely on the onboarding, for instance. Again, we try to automate as much as possible because, again, getting them all on board, getting as many customers on board as quickly as possible, as seamlessly as possible as well. Obviously, I'm sure friction is something that you try to keep out of the process, and this can be a pain point for customers as well, and you kind of try to reduce that friction as well. From a fraud perspective, I've had many conversations with you know, my CEO, telling him I want more fraud headcount, and he's like, well, you know, headcount, you know, don't know if we can give you that, but my sell is basically, well, fraud analysts save you money as a business. They will save you money. So it actually turned out in previous companies, I was actually pretty easy to get fraud analysts on board, but you know, compared to other parts of the business. And again, yeah, the who you pick as well, who you're going to use as well is very important too.
Sure. It's interesting you talk about analysts as kind of the industry. You know, we look at the banks and what they've done and thrown headcount at that problem, and we've moved more towards kind of how can we look at it from a more efficient manner? So as well as the headcount side of things, have you implemented any form of technology efficiency sides, or been asking the CEO to dig in his pocket from a technology point?
Just on the banks, like for instance, I I'm sure people here worked in big banks, but I know of a fraud shop that brought on another 30 people, and for me that makes me go, surely there's a better way. Like then you look at what are the tools you're using. So we partner with a company called FeatureSpace. They have the artificial intelligence and the machine learning models. And that really is, you have your basic level, which is your rules. You write your rules, you follow the trends, the data, and you write up your rules there. Or be more proactive and move up the tier and get the AI, the machine learning, get the models in place. So that is going to bring down your fraud, get it more targeted, to give you scores, and you can target, a lot more, get rid of the high scores, get rid of low scores, and get more focused.
Fantastic. And we've kind of briefly touched upon it as well in terms of, Stu, you're looking to move into other markets. Ian, I know you've worked with different regulators across the globe. So one thing that's always brought up to me with high growth fintechs, and there's a bit of a sticky subject in some places, is how you can work efficiently with regulators. So it'd be great to get your take on, how you are working with these regulators, what are the challenges that you've faced, and potentially any tips on how you can overcome them or get ahead of the game.
Yeah, I think it's it's a difficult one, because yes, it is a difficult process, particularly when you're a reasonably small business scaling up to really engage with the regulators. They're working with a risk-based approach, and you're not even on their radar, which is a good thing. When there's a whole load going on, they're not resourced well and stuff like that. However, you've got to be on the front foot. You've got to be open with the regulators. You've got to keep them involved at all times, particularly when you're moving overseas. One of the biggest things that we have sort of engaged with going to the UK is getting to understand why it's such a long lead time. Now we know it's a long lead time because it's a very complex market. It's got a very complex regulatory environment over there. We have engaged with the FCA and made sure that we understand exactly what they want before we even dip our toe in the water. You can't wing it. You can't be under the radar and hope that they don't notice you. You've got to be able to gain that validation and get the work done, the hard yards done, to make sure that there's no surprises and you understand that regulatory environment fully. The other thing that we've done very well, and it's actually two founders engaged with a number of sort of parties back in the day when we first started out, but we came under the sort of radar of Austrade, and Austrade are a fantastic enabler. They really are. When you're actually looking to go overseas, they have people everywhere. All of the embassies and the consulates are all linked into the Austrade sort of facilitators. I've done that with another company previously in South America, really successfully. They are a great organisation to engage if you're thinking of going overseas. They have the access to all of the Department of Trade and Industry people, and essentially can help with the regulatory tie-ups as well, which they've done with us from ASIC to FCA in the UK. So yeah, I think it's do your homework. And I think the other thing that you've got to really make sure is that when you're going overseas or you're getting involved with a new set of regulators, you don't forget the regulators at home either. It's very easy to take your foot off the pedal, take your eye off the ball, and actually fall foul. You got to a position of getting overseas because you've done things really well and have generated those contacts and those engagements. It's very easy to break those and not easy to build them back up again. So don't forget your home regulator, but engage with the right people to generate the right contacts overseas.
Amazing. And sorry, just one question on the back of that.
Yeah,
so,
sure.
So you mentioned engaging in regulators. Like, what kind of things are you engaging on here? How are you approaching that situation?
Yeah, I mean, it's a good question. I mean, essentially, if we take again the UK, for instance, it's sitting down, just being a sponge. Get them to tell you what you need to do. Get them to verify your intentions at the end of the day. We've gone over there and said we need an e-money license. We want to replicate what we got in Australia. We know they've gone round and round and round, going, well, I don't think it's an e-money license. And we've gone through 5 or 6 different people who've been questioning us, interrogating us, and come back to the fact that, we think you need an e-money license. But it's a case of go through that process, get them to validate it, because Sod's Law says that, if you don't go through that, if you don't let them have their sort of engagement, their interrogation of you, something will be wrong and it won't be an e-money license at the end of it. So I just think, you just got to sit back and let them tell you what to do as much as anything else. Whilst not, obviously not giving the perception that you don't know what you're doing. But, the regulators are quite fickle, and they like to feel in charge, that's for sure, particularly the FCA.
Perfect.
So from my perspective, dealing with the regulators, transparency is probably one of the big pieces. And if in doubt, always go to your CRO for guidance. But, dealing with complaints, dealing with SMRs, I kind of have a rule, basically give as much information as you can. And, we're all in digital, so we have plenty of information that we can share with these regulators. By giving all that information, it means that don't give them a chance to ask you questions, is basically the way I would approach it. Dealing with them in Ireland, in case you didn't realise I'm from Ireland, but have dealt with the CBI in Ireland, and they are pretty, like, they have a very good reputation, but they're tough. Like, they're tough taskmasters. I keep my ear to the ground, and speaking to some of the people in Ireland now, like the CBI, for instance, they ask, what's your culture like? So for a regulator to be coming and asking, what type of business have you, but what type of culture have you got in your business? It's definitely different. So, and it can be like, here is, they're fairly straightforward, like, obviously keep giving them what they need and answer everything I say. But it's just, the difference between Ireland and Australia has been, eye-opening.
Amazing. So you give them what they need is coming across there. So how often are you in contact with regulators? Do you have check-ins? How does that work from a contact perspective and staying on top?
At the moment, probably monthly. There's check-ins. I would work very closely with the CRO. He has a lot of interaction, a lot more than I would specifically, but I work with him directly to provide the information that he needs.
Fantastic, great. Yeah, I'm sure a lot of people would hide from that, so it's great to hear the opposite end of the scale and how that can help you grow and scale and keep moving forward. To move off from regulators and let's try and liven the crowd up a little bit again. You touched on earlier, Ian, the kind of advancements that things have made instead of just looking at headcount of putting at the problems. And you used the example of the AI machine learning models that Featurespace have. And I remember when I joined the industry, there was a big hoo-ha about machine learning, and everybody wanted it. And regulators definitely weren't forthcoming in accepting it. I know across the past 5 years, that's obviously changed. We're seeing it more and more. Comply Advantage have just released smart alerts from an AML perspective where we're using machine learning. So from both of your perspective, to see innovations like AI and machine learning, where do you think it needs to be driven from? Should it be driven from regulators, or should it be the industry knocking on the door on those monthly meetings asking, we want to try this, we want to attempt this? What do you think is the best approach to see innovation?
Look, from my perspective, I think, obviously the industry has to innovate. That keeps everybody rolling along. The regulators have to regulate. That's their primary responsibility. But I think, there's enough out there that is actually working hand in hand. And I think it sort of almost looks to me, you've got FinTech innovating at a product level, innovating at a financial workflow level, if you like, and then you've got the regulators going, well, how do we regulate for this? And they come out with the regulations. Then you've got RegTech going, well, how do we build the technology and innovate to support the regulations that are being driven by the FinTech? So I think it's almost like a circular process at the moment, and I think that works well. I think it's working well. I think it will work well going forward. I think with things like the Fintel Alliance, with FinTech Australia, with the RegTech Association, all of those things help to drive both innovation and regulation in lockstep, really, as much as is possible at the moment. Can it be better? Absolutely, but I think I think that's a concept that works well for me.
It's interesting because there are obviously those 3 points. Who can help drive this? So from your opinion, do you think there's enough collaboration at the moment, or are they looking at it from different angles and then all coming together in one space and going, oh yeah, that's a good idea? I
think, and rightly so, in a lot of cases, there's a lot of competition out there, obviously. From a purely pragmatic view, take the competition out, everybody work together, come up with wonderful solutions that fit everybody. Now, that's not realistic thinking in anyone's mindset. However, I think there's enough people with skin in the game, and the game is big enough for everybody to really, have a part of that. I don't think anybody needs to stifle competition, but they can come out with standards that fit the industry. And I think you're only going to be a success during competition if you have something that people want. And if you swamp them with too many choices, people just get lost. So I think, if we can get some ubiquitous standards out there, it helps the regulators regulate, it helps the industry build, and hopefully it helps all of the innovators build their products out that become profitable and revenue generated.
I'm sure you've got a different perspective because obviously now in the B2B side, you're part of hopefully that innovation and helping people reach that. So
yeah, absolutely. I would say we basically we're a tech company, so we try to drive it ourselves, and we again look at the best solutions we can get, put them into a platform, and we drive it from that perspective. And again, one of our key things was when we were starting out was how much can we automate. So again, automate as much as we can, and again touching on the AI. I've worked in a company, for instance, where we had a fraud solution, and I had a team of 15 people working on working fraud alerts daily, and then one day I get an email saying, oh, here's your new fraud score, check this out. And I'm looking then going, doing the analysis on this score, how successful is it, back testing it against all the transactions that we had, and I'm like, wow, everything above 90 I could actually hard decline, and then I am reducing false positives by like 70%. And I'm looking, and it is actually then going, okay, I could actually allow people on this fraud team to move into different areas of the business, be it chargebacks, be it the onboarding. So yeah, I'll definitely say that we drive. I believe all the fintechs are going to be driving the innovation. Obviously, the regulator will be keeping an eye on us, but to ensure that we're doing everything above board. But yeah, that's my perspective.
Fantastic. And interesting, at the beginning of your answer there, just to take you back, you said you kind of look at the landscape and you find the right solution for you. Yeah. One area of innovation that we've seen that's quite common at the moment is this kind of attempt to see nirvana of everything in one particular place and it all put together. So what's your opinion on on that and where it stands at the moment and how it can help or potentially hinder?
Yeah, look, I think we sort of almost Patron is a subscriber to that nirvana. Maybe not from a compliance and regulatory perspective, but this is where I think I'm getting a mindset at the moment in terms of this collaboration ethos, things complementing. We provide a platform that provides lots of joined up processes, workflows and functionality, but none of the components that we're actually using are ours, apart from the glue that sticks it all together, essentially. So I can see where the collaboration comes, where that nirvana methodology or mindset comes from, because we want to use best of breed in delivering a best of breed solution to our customer base. So, slightly different to Ian's take on it, absolutely. But I think, to me, that's worked well with the banks because they don't see us as being competitive to them generally. We're actually getting opportunities with the banks to actually, I won't say partner, because that puts in different emotions to people, but work with the banks to show that we can collaborate with them and actually provide solutions that they can buy into as well. So, to me, this collaborative sort of mindset is something that I really subscribe to.
I'm sure you're very similar. It was a loaded question, given both your business models.
Yeah, so we actually I remember like 2 or 3 years ago, I think it was one of the big banks got a fine, but one of the recommendations was actually too many systems. And so we actually, we use a tool in-house. We used a partner or a vendor called Appian. And so that is our CRM system, but we've also integrated our fraud system, our onboarding system. So we have it all, one pane of glass is what our CTO says. So ensuring that everything is there and our team can do 95% of their tasks there. So having that, I think is a really good is a good solution.
Fantastic. I think we're out of time, so thank you both for your time. Thanks everyone for listening.
Thank you, Ian, Stu, and Zach from Comply Advantage. Moving on to our next session with Jumio is a fireside chat on the best-in-class digital experience made simple with Stephen Chow, APAC Strategic Director of Jumio, and Ben FinTech Ford, Head of Growth at Frollo.
Hey Ben, this light makes me look bolder, but I actually have more hair than what I look like, okay? So first of all, thanks FinTech Australia for inviting Jumio. Second of all, thanks Ben for coming. We had a catch up already, and when we first met, we had so much to talk about. But today is really talking about how do we go about doing KYC and considerations and all that, right? So just a bit of statistics. Being Asian, I like numbers, right? Stereotypical type. So basically, fraud is a $53 billion problem right now for APAC. I don't have the breakup for Australia, but it's a $53 billion problem. And what they found is 80% of the fraud happens on onboarding, right? If prevented correctly, it would go quite far. So the first question I would like to ask Ben is, what I've noticed within Australia is a lot of the KYC is done predominantly on just a database check, okay? So basically my first question is, Ben, in your experience as well as your market knowledge, is database checking of a person enough for a KYC?
That's a loaded question, so I'm going to have to be very careful how I answer that. I'll just provide, for those that don't know me, my name is Ben Ford. I'm currently Head of Growth at Frollo.
I'm so sorry.
No,
Ben, can you please introduce yourself? Good pickup.
Most people probably know me in a fintech capacity, but prior to being a fintech aficionado, I spent 5 years working on the Green ID product, which is one of the market-leading ID solutions or AML KYC solutions in Australia. I did that mostly in Sydney, but also spent a year setting up the Green ID business in London as well, as the only person or one of 2 people in country. So to go back to the question, after a little pause, we are, I think, in Australia, and again, for those that I will just say, I'm probably a little bit rusty on this, so if there's more up-to-date practitioners, hold me to account and call me out. We'll have some questions at the end, I'm sure, if we've got time. But yeah, absolutely. So we run off databases predominantly in Australia. So in terms of onboarding a customer, going through the AML KYC process for an online gambling company, fintech app, a mobile bank or anything like that, you really just need to prove that an identity exists, and you don't need to authenticate that the person purporting to be that identity is who they say they're being. So that's probably a limitation of the legislation at the moment. There's no requirement to do that other than for a mortgage, as I understand it. So pretty much if I'm sitting behind you on the bus, you leave your wallet on the bus, I've got your driver's license, I've got your name, address and date of birth, I can be you to all intents and purposes online, and I can get a credit card, I can get small personal loan, I could do all manner of fraudulent activities. So yeah, to your point, there's an absolute sort of limitation there. I don't know why the market or the regulation or the industry hasn't sort of completely embraced authentication using biometrics. So this has been around for a long time. There are some companies that do it and do a pretty good job of it, but it doesn't seem to have been sort of completely wholly taken up across the industry. And I don't know why that is. I think there's a major miss. I think because you're not legislated to do it, if you're in a bank, you've got a system in place, you use a rule set using a Green ID or a competitive product, Frankie Financial, could be the Equifax product, ID Matrix, and all you have to do is pass a scorecard to confirm that an identity exists, and then you're good to go. And I think there's a legacy sort of issue that we're facing where not enough people have got so sort of lazy and complacent with these systems, ripping them out and starting again would be really, really complex, and not everyone wants to be dotting the T's, dotting the I's and crossing the T's and going to that level of thoroughness when they're onboarding customers.
Great answer. So I guess if you ask me and I'm not the person asking a question, my simple question back is, how do you know the person that's submitting the document is the person they say they are? If someone stole my ID and then decided to just use my name and do a database check, where's the next level of security? I don't know. So this is just a fruitful thought, because I've noticed in Australia that only they rely on database checking. But you then brought up a very interesting point, right? So there's a lot of solutions out there, and when you go on this journey of creating your own KYC, the first question you want to ask most of the time is, do we do it in-house or do we outsource it? So the first question is, when you work with, like growth, and you need to build that, when was the point where you say, okay, you know what, it's easier just outsourcing?
Oh, look, I think for a fast-growing fintech or any smaller organization, it's just outsourced from the get-go. So you literally deploy a solution like Frankie, like ID Matrix, like Jumio, like Green ID, and you rely on that rule set. You make your checks and balances, whether your rule set safe harbor, minimum standards, whatever it is in between. There's some pretty good and complex hybrid rule sets, and you can sort of be quite crafty and make the database checks more stringent, so you can't be sort of completely let anyone through the gates. Although some online betting companies do generally relax their rule sets in the first week of November to onboard as many customers as possible. It might be a coincidence that that's when they do 30% of their business annually, and then after that they tighten up the rule set again, so I've heard. But I think all of the fintechs and the fast-growing companies that I've spoken to, until you get to a reasonable scale or size, you're probably not going to be putting in your own AML team from the get-go, I would say. And I think there's quite a degree of flexibility in the solutions on offer now that enable you to be pretty comprehensive with having a relatively sort of standardized and out-of-the-box solution, at least as you're getting going.
Right. So then the follow-up question is, if you decide to outsource, there's so many players out there. Jumio is just one of them, right? Like if I last check and you type in KYC, you'll get a list of at least 27 to 30. So where do you start? When you actually engaged on that process, how do you even know who to approach?
Oh, look, it's just word of mouth recommendations. You go to the network and see what people say. I think generally speaking, there will be a groundswell of people working with particular organisations, and like I say, there's been some sort of new players, or one or two new players. I've mentioned them a few times that have come on the scene, and I'd say they've got a fairly evangelical and rabidly base of advocates. So a lot of new fintechs are going to these guys. They're easy to work with, easy to engage with, and as I say, people who use them tend to be raving fans, and they'll recommend them to their fellow startups and get off the ground that way. Otherwise, you just go to the ones that are well established, unless you're seeing something come through that's really sort of new and interesting, or people can differentiate on product features and things like that.
Okay. So I'd like to share a customer's reply to me when I asked him this question, right? This was the smartest thing I've ever heard. He goes, I go into the app, like Google app, I look at my competitors, I look at their app. When people download, they write comments. And if those ratings are really positive, I want to find out who's doing their KYC. I thought that was pretty smart, right? Just because then you don't know, because everybody's saying the same thing, right? Everybody's saying the same thing. Obviously, if I put my sales hat on and I'm just going to do a little salesy stuff, I would say reputation is very important. Client feedback is very important as well. And mostly important, even though it's a fintech, you need to know they've got some R&D behind it, because fraud is just happening so quick in terms of the advancement, right? So, for thought there. Now, everybody's talking about customer-centric system, customer-centric workflow. That's like a tag word. But if we want to really go down to talk about how do you even start creating a system or workflow which is customer-centric, where do you start?
Well, going back to your point, I think removing friction, and I think it was mentioned before, removing friction at every single point that you can, removing the referred cases, minimizing those, that's basically what it boils down to. So you're looking for a partner or a system that makes it as frictionless as possible. You can embed it into your flow, get people through the door, minimum intervention. That's probably where you've got to sort of start with that from that point of view, and then just build from there.
I think that's a great answer. If I was to share some of my customers' feedback in terms of how they actually go about it, and if you listen to enough to customers talk, they have similarity. First one, even though it's a bit hard to believe, they actually have customization for the onboarding, right? And you go, how the heck are they going to do that? Well, I'll give you an example. You're going to be creating a bit more friction when you do someone onboarding in Philippines than you are in Australia. So geographical is one feature. Second one is actually document type. When you know the passport, it's going to be harder to fraud. You're not going to really check as much, right? So they always talk about customize and then having a process which differentiates. That gives the customer a bit of like the feel and the flow is quite great. The second one they talked about is they really want to make sure that they utilize technology like liveness. Proving someone is actually the person submitting it. They need that part because it's very frictionless. And if you could imagine, back in the olden days, I like to use that. I can say that because I'm Gen X. When you want to open up an account, you go to the bank, you make a booking, you wait in queue, and you hand all these forms. Guess what? That's not happening anymore, right? It's all digital. So another point is how do you, they always talk about the liveness, but they also talk about how do you use technology like OCR? When you have an OCR extracting that information from that document, rather than getting a customer typing it, you're reducing friction, right? So based on all those little factors, I think you could have some sharing commons here to say, like a customer-centric is understanding, people are different, document types are different, places are different. And then you also need to kind of figure out how do you use the liveness, how do you utilize the OCR. Okay, so that's pretty basically there.
Yeah, sorry, you just made me, just talking there, you just made me think of something, and I'm just going to contradict what I said before, actually. But I think the friction and the technology has to work harmoniously. And just to go back to my point earlier about maybe why there's not been the OCR or the biometric sort of take-up in Australia is because what's there at the moment, to all intents and purposes, works reasonably well. And I think maybe, I remember going around in London with a beta version of the app on my phone to do demos to banks like Santander and to PwC to try and roll out a biometric version of Green ID. And you get strip lighting off the ceiling and you're trying to take a photo of the passport and it doesn't work. So you're there in a demo, and there's nothing worse than when you're in a demo with a bank and you're waiting 6 minutes for a photograph to take and things like that because it's stripping off the passport and it's you're getting this glimmer and gleam and stuff like that. So I think if you've got the technology working, you know, the nirvana should be to take a photo of a driver's license, do your OCR, verify against data sources, verify the likeness with a selfie, and effectively you've got a 3 to 5 click verification. Yep, and I guess that's what we're sort of working towards. That's a completely frictionless approach, but it's completely dependent on the technology working and enabling that.
I didn't pay Ben to say that. He just described our product. Okay, so I mean, definitely, if the technology is working, right? So 100% agree on that side. Now, I want to talk about what Zach was introducing before, the nirvana. Everybody understand that if I have 5 different partners or 5 different vendors that I need to manage, it doesn't beat one, right? So we always talk about a platform nowadays, at it be a build or whatever. So I want to kind of go to that theme and talk about when you guys decide to implement a workflow. Was it a single point solution that you're looking for, or were you future-proofing? And if I may, future-proofing means you have more ambition to grow out, you know, like cross-border versus just within one country. So kind of really want to know more about that.
I guess for us, you know, we have a platform, this is a Frollo talking about now, and we're just constantly sort of implementing and iterating on that and adding in new features and new partners. It could be a AML KYC provider locally. And I guess it's just got to be an easy integration. It's got to be, you know, driven by demand of our B2B customers. So we operate in a fairly sort of similar way to the guys at Shape, in that we're a B2C business, but we also have a B2B platform, is what we sell to banks and other fintechs and financial institutions. So it's sort of kind of driven, this sort of flywheel is kind of driven by demand from the customers, the ease of integration, and then sort of building that out. But at the moment, we're completely local, so we're a completely Australian business, so we've not sort of started looking beyond Australia at the moment.
When you do, you know who to look for. Anyway, so I think that's a very valid point, right? Because with a lot of our customers, especially because predominantly my customers are Asia-based, and with the geographic of, you know, Asia or Southeast Asia specifically, they're always thinking about cross-border business. So when they decide, one question or one sort of like sharing we always want to talk about is, where do you see yourself in 5 years? Because when you're looking for a solution at the very start, you're always thinking about solving an immediate problem. But what we always tend to ask is, what's next, right? And that's where we want to kind of see where they want to go, and then be able to tell them, you might only be looking at the single point of a problem that you're solving, but what happens when you induct the customer? How are you going to monitor the transaction, right? How are you going to do the AML compliance? So we want them to think more in terms of just, okay, I'm just going to get someone on board, right? So that's kind of where I see the customers who actually do a better job in terms of creating a system. That's what they go about, right? So next question, in terms of, like, you know, we're all going through very tough times. I mean, everybody, right, in terms of the economy and so forth. And innovation and technology is even more vital, right? Because with that, you're looking towards lowering expenses, right? So on that perspective, how are you guys innovating in terms of the process and all that, so that you could see areas of saving, you know?
So there's two elements to that. There's a B2B and a B2C question. So I guess ultimately, we're a money management app, so we're trying to help consumers feel better about money. That's our company tagline. We try and live by those values. We're a purpose-led fintech. We have pretty good visibility over the benefits of people interacting with their money, but also we're seeing that their spending has gone up exponentially. We've released some stats on cost of living analysis. Everyone seems to be doing one of these. Anyone who's got access to consumer data at the moment rolls out some information and some data that they're sitting on, and basically all points to the same thing. So we are trying to innovate by adding in new features to our product that help people get out of tight spots financially, build savings, reduce debt, and things like that, albeit in a tough financial environment. We build those products for consumers. We test them in our app to see if consumers like them and they resonate with consumers. And then if they do, we then sell them to our business customers, and then they roll them out to their customer bases, which generally are far larger and far more significant. So, we build something for 50,000 people in our app. If it works, we then pass it on to a bank who will take it and roll it out to 1 million or 2 million customers if they're a bigger bank or something like that.
Okay.
Yep.
So basically, you test the market before it goes and implemented.
Yeah.
Sure. So in terms of the question that I was asking is more about innovation, and when you're looking for the vendor that you're using, right? Data is everything. If you're looking at the onboarding process, whatever vendor you're using is roughly in terms of process, like showing an identity, doing a face capture and all that, it's always between 10 to 15 steps, right? Usually, right? So from your perspective, how valuable are data in terms of knowing where the dropout rate is, in the whole journey for you to improve your process? Because, with KYC, it's a direct proportion. The more you onboard, the more you actually become customers, the more revenue you generate. If the dropout rate is high, it's going to be a problem. So how are you using those information to help you advance the process?
I suppose, I guess we'd sort of talk to the vendors that we're dealing with, and I guess one of the reasons why Frankie have done pretty well disrupting pretty much a two-horse race for the large part in Australia is because they've taken a model, they have innovated on the model, and they've actually aggregated data from a range of different sources, so they're not just relying on one or a one sort of data channel. So by blending that up, I think they've sort of probably done some fairly significant fintech disruption by, as I say, breaking up a duopoly and really sort of leaning into that and aggregating the data and basically turning the model a little bit on its head. So I think that's kind of where they've really done something quite interesting and why they're going gangbusters at the moment.
Okay. Yeah, because the point that I was trying to drive at is because there's so much data, but we don't ask the right question. I mean, Frankie does a great job in terms of door, but if you're looking back specifically for a KYC, as I said, there's 10 to 15 process, right? And if say for a step 3, the dropout rate is really high, how do you improve that? And those are statistics that is relevant in that regards. Yep.
I mean, I think the other thing probably that's going to help with this is the use of open banking data becoming more freely available as an additional source to cross-tabulate or triangulate the information. So I think it's probably going to be harder to steal someone's open banking or banking credentials or banking information than it will be to steal a driver's license. So by adding that as an additional layer, I think you're probably adding, you're getting towards that authentication piece without necessarily needing to go to biometrics if you don't want to.
Absolutely. Look, I think we mentioned quite a few important points in terms of how do you start a process, how do you become customer centric, and then I guess the thing is when you have a process, it's working. Do you, as a regular practice, kind of evaluate, is it still working or can we make improvement? Do you go through that logic of your team?
Absolutely. Yeah, we're looking at that all the time, seeing where people are dropping off on the onboarding process, where people are failing to complete a particular phase. And then we just go back and iterate and try and smooth it over if we can.
You know what, that's a fantastic, that's what I think that's so important, because I just got a actual business case where the customer's drop-off rate, this is a Malaysian customer, it's a digital bank. What happens is for every 100 people that got onboarded, the drop-off rate was roughly around 40%. Okay, so for every 100 person that goes on the online to show the ID, before they finish things off, 40% drops off. Now that's a lot of revenue loss. So what we did was very, very simple, sort of like analytics to say, okay, what's happening? Why are they dropping off? Okay, and then what happens is, what we found is they weren't comfortable looking at themselves on a picture. Can you believe it? It is that simple. They feel agitated to see themselves, and then they just go, oh, stuff it, I won't go through it. Guess what? We changed it to lines with gradients. It didn't completely regulate to 40%, but it dropped it by 23% with a simple kind of like advancement in that. So the point that I'm trying to get across is, don't be content with what you have, because there's always something better, but you just need to know what to look out for, in that regards.
Yeah. I agree with that. Some of the smartest AML KYC practitioners go through that exact process, constantly looking to tweak things. And like you say, sometimes something can be looking you straight in the face and you don't see what it is. It's very, very simple. You almost sort of think it's too obvious to make a difference, but it can, absolutely it can, and that's why you should always pay attention to it.
Great. So I know we're kind of running out of time, but I haven't seen the hand up yet, so I'm going to ask one more question. You can't miss him. He's like 6'7". Okay, sorry, that was just a little joke. So the final question to kind of wrap this up is, from your perspective, as a... Oh, is it? I don't know. I'm from Asia. I'm just used to all different sounds. It's too quiet in Sydney for me. I'm sorry, I'm going off the back here. Okay. So the question, I just lost my question, for heaven's sake. No, I'm only joking. The last one is, as a customer, if there's anything that you want to tell, like the Jumios of the world, or the AML of the world, and anything, like, is there a missing process that you always think might be beneficial for customers, or anything that you want to kind of like say, hey, there's something still missing?
I would say doing a great job, as is everyone else. But I would say, if you can give me 5-click verification, that's my nirvana. So I would ask for that.
The funniest thing is, I just have another very important customer here, Simon from Mox Bank. He was arguing with my boss in the very early days when they were developing a KYC, how many clicks. So that was 5 years ago. So things don't change. Obviously, we try. The less friction, the better it is. But we always have to balance this between, compliance versus conversion, right? And I end it with here because I think time's up. I don't know, do we go on the questions, or we just leave it for the next person now? So, yeah, absolutely.
I know, sorry, I know the numbers, but you can tell the audience how many transactions are doing Shumi per year, and my question is, also for Frodo too, how many transactions are you expected the next year, for 2023?
You mean Jumio?
Yeah.
Oh wow. Doing some advertising now. So
because it's impressive.
No, that's a very good question. Not because I want to show off, right? But we are currently doing 1.6 million scans per day. So in a year, it's roughly around 600 million. Now, let me explain why that number is significant. Because everybody loves AI. Everybody loves machine learning. But guess what? It's really nothing special about AI. It's all about statistical sampling. The more sample size you have, the more accurate you are. Some people might argue with me, no problems, but that's how I say AI. The more sample data you have, the more accurate you are. And with that sort of scale, we are one of the highest in terms of accuracy. And that's what you should be asking, when you're deciding to outsource, what sort of numbers are they doing? Because how do you efficientize the actual AI intelligence? Okay.
Yeah.
for you to-
We don't really have a metric that would be relevant because we're not in that space. So I don't know what number you want me to. I can't give you a number.
No, maybe I was impressed also that Frollo can integrate, like, how many APIs are you integrate at the moment? And also,
110 or so.
yeah, that is, yeah. As a senior.
If we're talking open banking, we've done somewhere in the region of 50 million API calls now, which I think is probably about 85 to 90% of all of the open banking API calls in Australia. But that's a bit of a meaningless metric, actually, the API calls. I don't want to get hung up on that. It's a good number, though.
Scan numbers to us is business, so it does matter.
Hi there, I'm Angelo. Just a quick one on the industry in itself. Are we building like a universal KYC identifier across all providers? Say if I was Angelo and my KYC number is 12345, I give it to any financial institution and go, yeah, I'll take this.
Wow, any government officials here? Because this is very sensitive. Okay, from an industry perspective, it's never going to happen, right? It won't. When you're talking about it's cross-border as well, and not just within Australia. Within the Asia context, there's only 4 countries in Asia that has a central database, Australia being one of them, the other being Thailand, Singapore, and Indonesia. Okay, so back to your question, are we going to build a cross-border, if I've done my KYC here, can I be recognized in Singapore? In my lifetime, I don't think that's going to ever happen because there's too much security law and privacy law that's going to dictate that not happening.
How about not cross-border, but just in Australia alone? Like say if
It's,
you and your competitors would have common identifiers.
To be honest, we are working with MasterCard to kind of build that, but then again, I don't know whether this is the right context to talk about it, because basically MasterCard is already used by a lot of people. So if MasterCard says, look, I am going to vow on this person because I've done my KYC, that becomes a digital identity. Okay, that is happening.
And there's been the DVS, the Document Verification Service, which took an awful long time to build. It basically meant that at least there was a uniform way of accessing government IDs for the purposes of AML and KYC, but they generally would only form part of a complete check, depending on the rule set or how stringent. But that took a huge amount of time and effort to orchestrate and get going, so I think everyone's sort of a little bit scared after that.
Thanks, guys.
I'd like to get your thoughts on biometrics, actually. You know, we talked about databases, and obviously you run all the search off the databases, and now, you know, we hear a lot about biometrics, and thoughts are, do you think it's a nice to have or it's crucial? And one of the big issues I kind of see with biometrics is, you know, you've got companies like ThreatMetrics, Arcos Labs doing this stuff, but the cost is pretty high. So just wanted to get your thoughts on that.
Yeah, I mean, that's probably one of the apathy cost is one of the reasons, and accuracy of the technology, particularly in the early stages or days, is probably one of the reasons why it's not sort of taken off at scale. I don't know about the costings at the moment, but you would have thought if there weren't some major impediments in the way, it should be a best practice that's been adopted as almost a universal standard now. You know, we were out peddling this in 2012, you know, and it's still not uniformly, I think there's some semi-okay offerings and stuff, but it's not uniform. I don't get it. So there's got to be something at play, right?
Not just me, so.
Yeah.
My perspective is completely different. Biometrics is 100% a lot safer, and we've got too much research backed up, but biometrics by itself is not enough. It's always overlaying. So you would need biometrics as well as liveness detection. For those who don't know the difference, let me quickly explain. Biometrics is looking at landmarks on the face, the ratio between your eyebrow to your forehead and your ear shape, your cheek shape, and so forth. Those are what we call landmark. So biometrics is matching landmarks to a photo. So that's just one form, and it's definitely, you know, like to have a statistical reference of error is extremely low, but it needs to add liveness to it. Like liveness is where I have to have a way where I need to check that I'm a real person and not a recording, right? So if you look at the more advanced liveness detection, in one frame, just our stuff, we have roughly around 150 signals to kind of identify the shades and so forth. And I think I'm getting round up, so I don't think I'll go anymore. But my answer to that, 100%, biometrics is a very safe feature, but has to have more layering like liveness in it. The next advancement is retina checks, by the way. You will see that coming on the market within the next 2 years.
Thanks, Ben. Thanks, Steve. In the interest of time, I'm just going to quickly introduce Paul Kang, FinTech Australia board member and co-founder of Entersoft Security, and Sandeep Kumar, founder and CEO of Astero. So a little bit of background here. FinTech Australia is committed, of course, to advocating for our members and supporting our members as they grow and scale. And a huge part of it is working with regulators and ensuring that we can ensure the fintechs continue to innovate and continue to address the challenges that policy needs to keep up with. So as part of that, we have policy working groups and we have conversations continuing on open data, on payments, on crypto, on lending, and multiple other subsectors within fintech. A new initiative that we are working on is subcommittees that we're building out to talk about specific issues within the industry that all our members can participate in. And one of those subcommittees is on the cybersecurity. We've been working with Paul and Sandeep to further build that out, and they'll be the best people to share more about it. Go ahead, Paul.
Sounds good. Thanks, Rohan. So yeah, no, great to be here. And this is an initiative that we've been working on for about 12 months now. Finally, we've had the opportunity to launch, and I think it's quite timely as well, right, given everything that's been happening in the Australian ecosystem. But the biggest thing is, you look at the fintech ecosystem, it's building products at a fast speed, gathers a lot of data, which is, one, a big asset, but at the same time can be a potential liability. So cybersecurity is quite important. The main vision and mission of the committee is to build awareness within the ecosystem, share threat intel within the ecosystem where you can share knowledge, because cybersecurity it's not an individual or it's not an IT problem, it's a business-wide problem. So being able to cross-share knowledge between different fintechs, understand the types of threats, allows us to be more proactive, looking at ways to spread awareness and run events. So I'm quite excited by this initiative. We're launching expressions of interest to grow the committee. I think that closes November 9th. And yeah, really just looking to foster a safe, secure ecosystem, which then builds trust with key stakeholders like banks, financial institutes, investors, etc. There's a lot of funds that are being poured into the fintech space, so it's important that there's good awareness that's shared as well. So hand it over to Sandeep.
Yeah, cheers, Paul, and nice to see everyone here tonight. So Paul raises a really good point about stakeholders for fintech. So many fintechs are selling to other organizations. Fintechs are basically becoming the backbone for a lot of the FS out here today. And what we really need to do is promote resilience. So what we've seen in the industry, and I won't go into the examples that everyone's heard in the media already, is that this could happen to anyone. And what we need to do is make sure that we are prepared for this type of incident. And what we're trying to promote through the committee is some of the best practices that fintechs from very early stage through the ASX listed companies can leverage. So it's sharing threat intelligence is very important. Everyone's kind of siloed away working on their own business, dealing with those things by themselves. But if we can share that information and grow that resilience within the community, I think that would be a really powerful thing. Again, we won't dig into the details of the data breaches that have happened, but the types of things that I would say as a recommendation to any of the fintechs in the crowd is look at a lot of the information that's been provided by the government agencies. So I know it mentioned in the agenda today that we'll touch on protection around data breaches and things like that. A huge recommendation would be to look at the Australian Cybersecurity Centre's website, refer to the Essential 8 framework. Cyber hygiene is just so important right now. It's without a doubt, if you looked at your systems tonight, you'll probably find one account that doesn't have multi-factor authentication on, a very simple control that mitigates such a huge threat. So go through the ACSC Essential 8, try and, I guess, look at those low-hanging fruit and start building some resilience. Look into a lot of other free resources out there. Tap us on the shoulder as well if you need to. And we will be promoting this committee over the next couple of weeks, I understand, with the EOI coming out. So I'll look forward to working with all of you. Thank you.
Yeah, we're going to keep this short, but if there's any questions, happy to take them.
Thank you. Hey, I'm Harry Godber at Flair. So the new Minister for Home Affairs in introducing the recent changes to controls and powers around cyber has gone pretty hard, in my opinion at least, on the idea that companies shouldn't be retaining more data than they absolutely have to. And yet, I guess a counterpoint to that is that in the fintech startup ecosystem in particular, often the way that companies come up with ingenious ways to create new business models is based on the data they've got. So where do you reckon the balance sits between a company's duty to only retain data that they really need to and the opportunities that are created by this sort of ingenuity that can come about with more data available to you?
That's a very good question.
Yeah, I can jump on that one. Yeah, really good question. I think it's really important to have some, I guess, core principles when building these products. So the principle of data minimization. So that from the outset, I think is very important. But to your point, a lot of information helps you come up with innovative ideas. So probably a key thing to look at is data retention. So yes, we've got all that data up front, but do we need to store that forever, for example? Or how are we protecting that data? How are we encrypting it during its use and its lifetime? I think those are the types of discussions that will come up. But yeah, you raise a really good point around the challenges around that.
Yeah, so Sandeep touched on it. So having data retention policies, but also zero knowledge, so end-to-end encrypted systems. So looking into future tech which can solve that problem, but allow you to keep those insights.
I have a bit of a question, and it's something that is on my mind as more of a consumer than, like, obviously we talk about data security, but then a lot of companies then using that data to on-sell it and monetize it, and that's where the efficacy and finding that balance between monetizing data and keeping it secure. And I'm curious to see what your thoughts are there, and what the happy medium is.
I think it goes back to having those right policies in place to protect your consumers, but at the same time being able to provide value, right, with the insights, because it's the data that's allowing us to provide these consumer insights and build these products. So the thing is, when we're going through this whole digitalization journey, that no system is safe or secure. Like, everything is vulnerable out there. But it's the aim for businesses to try and build to that 99.99%. And try and be as secure as possible, and build foundations and do the basics to make it harder for cyber criminals to exploit you. So that makes it difficult for that consumer data to be exploited. But yeah, just trying to follow best practices and give confidence to your consumers that you're doing the right thing as a business.
Yeah, I think you raise a really good point, and this is kind of the grey area between cybersecurity and privacy as well. So there's been a lot of calls out for a similar legislation to the GDPR, hopefully not so onerous for Australia, but I think Australians, consumers do need that type of protection, and we'll be seeing that type of thing coming through for sure.
Yeah. CDR touches on it quite a bit as well around the security side of things.
Tech question. In which company do you trust your database?
None.
The ones we work with.
Yeah, I think that, yeah, again, said in jest, but I think we have to be realistic, right? Like, probably people in this room have been impacted by data breaches just recently. So maybe, we all need to have our own incident response plan personally as well around these types of things that could happen, and potentially not put all your data on a service if you don't need to. If there's no asterisks on the field, maybe you don't need to fill out everything on the form, for example. But yeah, I think you could dig quite deep into that.
Yeah, create a separate digital ID which doesn't exist in the real world. Yeah.
Great. Thank you. Thanks, Paul. Thanks, Andy. So as Paul had mentioned, part of the cybersecurity subcommittee is where we are at is currently where we're accepting EOIs. And for those who want to join from our member base and from our community, please reach out. And we do aim to have that as a safe space for threat intelligence sharing and knowledge sharing on the entire issues that the industry is facing. That concludes our evening. Thank you so much. This is our last meetup for the year until next year, where you'll get to hear a lot more from us, FinTech Australia. But before we conclude, I just wanted to run by 3 webinars that we'll be running in the next couple of weeks. A key one for us is the EY FinTech Australia census that we'll be announcing on the 2nd of November. That's the one where we talk about the outcomes from the industry and all the learnings from talking about and speaking with all the fintechs in Australia and understanding the challenges that they've been going through, and the findings from that will be announced on the 2nd of November. We have Minister Ed Husick welcoming that day and on the day, and also having Scott Farrell and a couple of others participating in that conversation. So that's on the 2nd of November, and it's a webcast, so anyone can attend. The second webinar is on action initiation and the future of CDR with AdaTree, and that also has an amazing panel that I'm sure some of you have already heard about and would love for you to all join. That's on the 3rd of November. And on the 9th of November, we're talking about helping consumers navigate the financial crisis by boosting financial literacy and responsible lending. And that's organized by InvestNet Yodlee. I think they were there in the room here before. And that concludes it. Enjoy the rest of your evening. Thank you.